Hello traders, Gary Wagner here for Trending Markets just after 11 o'clock in Honolulu, 6 o'clock in New York on Monday, August the 31st. If today's activity in the markets were any indication of what we're going to see this week, the roller coaster ride we all went on last week might not be over. We might not be at the steepest part of the track, but we've still got a couple of 380 turns, so to speak. Now, Dow Jones Industrial Average closed off triple digits, off about 100 points, 16,528 on the day. If we look at our daily charts, you can see the inactivity really that we have seen in the market in terms of range after the dynamic 100, 200, 300, 400 point ranges we were looking at last week. But what I find most interesting, and this is what we want to see in terms of if we get follow through. Now, traders, first of all, this is a weekly chart. So it is not something we trade off of, but it's something we get a real indication of. And I pointed out the fact that when we look at this ascent, this is 2013 up to present time, but during this period, we know that we had a real sharp top right in this area, no doubt. And at the same time, as this market went up, it really was noteworthy in terms of a characteristic of the market is that we had these small, shallow retracements. And I'm going to try to highlight them for you right here. But on each of these small retracements, we had a single candlestick type that seemed to be present at the bottom or conclusion of each of those retracements. First of all, you can see the market goes down here. You've got a long-legged candlestick. Now, on this particular case, you do have an upper tail or range. You're not getting it so much on the other ones. Here, you can absolutely identify it as a hammer. Here, you can absolutely identify it as a hammer. And on all of these occasions, the most noteworthy aspect of the termination of the correction is that you had a dramatic low during that week, only to find the market would close at or slightly above or slightly below the opening price on Monday. And that's how you get these candlestick types, these hammer type candlesticks. Now, if the range gets very small, of course, it goes into more of a doji, which is kind of what you're seeing, for example, right here, is more of a doji than it is a hammer. However, the makeup of the candlestick characteristics are very, very similar, and they're both have these dramatic lows that have been resolved, meaning that when they hit those lows, buying re-enters the market and it's able to recoup. Now, we got that last week, and I think that that is something important. We certainly didn't see any follow through today. Now, this, of course, is a weekly chart, so this is the first day of the weekly chart. This is a trade that would be a more long-term trade, but we want to have some more concrete evidence that, in fact, this particular candlestick is going to give us that same information that we got on these prior moves as this market would correct. One, we had this as a much more sizable correction, this being really the first one we could actually label as a correction because we got that 10 points when we consider the range itself. So it's something we want to keep our eye on. And as I said, if we get confirmation such as you got here or here or here, you can see that we could have a really strong long underway. Now, in terms of other markets, the extremely interesting market has been crude oil, just dominating. Look at this move up near $50 a barrel. This is a daily chart, traders, and when we look at this, realize we were just short players in this market. Now, luckily, we got out with a profit on that trade. It hit our numbers. Our numbers were 38, so we were able to take two plays on oil, both of them profitable, one of them not very profitable, meaning it wasn't the kind of move that I would hope we could net result out of in terms of the range and the profit we made, but we made money nonetheless. 2 oil trades short, 2 oil trades in profit. Now, this has been a perplexing move because we could be seeing a key reversal and we could be seeing really a bear trap, and that's what we're trying to discern. But with moves like this, you've got tremendous short covering coming in the market, but it's got to be more than that. You're also getting buying coming into the market, and that to me is interesting. So my question is whether or not we'll see this market stall at some point and begin to move back down, or are we going to see this market begin to track up again near 60? Because realize that 60 is where we got this really nice rounded top here, a defined sell signal, but you really saw consolidation come into the market. And the other thing that I'm noticing in terms of the oil market is look at the size, the range that you've seen this market move up over 3 trading days. If you look at candle size anywhere on this chart through 2015, you don't come close to this candle size on any green candle having 2 in a row where you had this kind of surge followed by another surge. Here we're getting a triple candle. Here you get a surge right in here. You've got 1 and 2, but you're not getting this kind of a range. We've seen this market move up roughly, from 38 to 48. You've gotten this huge rise, $10 rise, and you've gotten it in 3 trading days. So that's something we want to keep our eye on too for our next trade. I think that the markets we really want to be looking at for this week in terms of trading opportunities are going to be the dollar, crude light, and S&P. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another Trending Markets. Bye-bye.